sort of raise the stakes when it comes to what's going to happen with Chair Powell's replacement, because any feeling that the Fed's independence is being compromised, or that we have a person who's more likely to listen to Trump, could be bad for sort of the Buy America trade.
Amara Mokwe, Bloomberg News Federal Reserve reporter, joining us from Washington, D.C. Up next, stocks on the move. This is Bloomberg Business Week Daily.
You're listening to Bloomberg Business Week Daily with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week Daily. I'm Tim Stenivek. That's Nora Melinda. She is in for Carol Massar. We're seeing stocks higher across the board today. The S&P 500 up 0.2%. The NASDAQ Composite up 0.4%. The Dow up close to 0.2% as we speak. Nora, we went into today's session, I think investors were really concerned about trade tension, especially given what happened over the weekend with the president mentioning a 30% tariff on goods coming from the European Union. But he did say he was open to talking a little earlier, and that seemed to quell at least some near-term investor concerns.
Yeah, clearly, and we're seeing that reflected in the trade today as we're seeing all these indexes rallying higher. It's interesting as we're getting all these headlines, all these things coming in the mix. It seems as though the market is still buying.
We got a big week of earnings. We're going to hear from some of the big banks this week. We're also going to hear from some of the airlines this week. So plus inflation data that's happening as well.
Lots to cover.
Lots to cover. I'm Tim Stenivek along with Nora Melinda. Let's take a look at some stocks on the move today. With us is Bloomberg News cross-asset reporter Emily Grafeo. It's Monday, Emily, but you're thinking about
the weekend?
Drinks in the weekend? I don't know. What's going on here?
I mean, I guess, you know, it's
It's not too early for a drink.
Yeah. People can have beer and wine during the week.
People still do
Absolutely.
that? Do they still do that?
People
Okay.
do that. Maybe not Gen Z as much.
Yeah.
Because Gen Z is very focused on wellness. And maybe that's what's reflected
Allegedly.
in Constellation Brands stock. The ticker is STZ. It's down about 4% today. Again, maybe it could be related to that declining demand from Gen Z, but we also got news on the Trump tariffs. So President Trump declared a 30% tariff rate for Mexico and the EU. There wasn't anything specific about alcohol, but these are key markets for drinks makers. So not only Constellation Brands is down, but we're also seeing Brown-Forman, Boston Beer, Molson Coors down. Constellation makes Modelo and Corona, and Citi noted that 100% of their beer profile is brewed in Mexico. Of course, this all hinges on, is that the tariff rate that will actually stick?
Yeah, and I'm looking at shares year to date, down 25% for this company. So it seems as though people are a little bit here on the stock here.
Right, and you hear a lot about like drinks makers and beverage companies trying to pivot away from alcohol, and I feel like every other day someone is introducing a non-alcoholic option.
Right.
I think it's a general cultural shift away from drinking a lot. That's weighing on these companies as well.
Yeah, low calorie options. People like an alternative these days.
Hey, speaking of a cultural shift, it seems to be that we're seeing a cultural shift when it comes to Wall Street and it comes to crypto, with Bitcoin reaching a new all-time high. I know you're watching a crypto company.
Yeah, this is a big milestone. Bitcoin topping 120K. It felt like just a year ago we were talking about how it was at like 60K. But I'm looking at Coinbase specifically because this is kind of a company that embodies that idea of digital asset DeFi becoming more mainstream. Coinbase, of course, is a crypto exchange. They're in the US. They joined the S&P 500 a couple months ago. And so that stock is higher today. We tend to see whenever there's like Bitcoin reaching a new high, Coinbase does well. And then also just watching the space for this week because the White House is calling this crypto week. There's going to be some bills that Congress is voting on this week that would clarify the structure of the crypto sector and regulations around it. So all around, it's like a very bullish day for crypto. And Coinbase, the ticker there is coin.
How fitting. You're also looking at Rocket Lab, right?
Yes. So Rocket Lab, ticker RKLB, is at a record high right now. It's up about 7%. Citi raised their price target on this stock. They said that the price target comes as they shift their valuation methodology to the company's revenue potential, which, if that sounds a bit boring, there's also some actually space-related news in here. This is a rocket satellite company. They said they expect revenue to grow roughly $2.6 billion, driven by 20 Neutron launches per year, further satellite construction wins, particularly for U.S. government programs. So, I don't know, I always think space is interesting, and certainly investors like to bet on it.
Yeah, this is interesting. It's a $22 billion market cap as of now. It's tiny compared to, in terms of launches, in terms of capabilities versus SpaceX. But Emily, it's always interesting to see what this company does.
Yeah.
In the wake of any tension that we see between President Trump and Elon Musk. And we've seen it move quite a bit over the last 6 weeks or so as the president has threatened to pull SpaceX contracts. To what extent Rocket Lab could actually fulfill what SpaceX does, that it can't do that at this point. There aren't that many competitors. There aren't really, that can actually do that. But,
it's up 640%.
It's
over
insane.
The last 12 months.
It's insane looking at all these aerospace or these space stocks here. I'm looking at an ETF. It's ticker UFO, Procure Space ETF, up about 30% this year. But if you really dig into some of the names there, lots of activity to watch.
Imagine if SpaceX was a public company, how much higher that ETF would be. There are certainly some ETFs that hold, bits of it, but it's obviously private.
Bloomberg News cross-asset reporter Emily Graffeo. For more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Check out Stock Movers on Apple, Spotify, or anywhere you get your podcast. If you're sticking around on TV, The Close is up next. If you're going to join us on Bloomberg Radio, YouTube, or Bloomberg Originals, Emily Graffeo is sticking around. And so is Nora Melinda. That's next.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Christopher Cruz in Washington. President Trump is threatening to double tariffs on Russia's trading partners if Moscow doesn't agree to a ceasefire in Ukraine within 50 days. He spoke to reporters in the Oval Office.
I'm disappointed in President Putin because I thought we would have had a deal 2 months ago, but it doesn't seem to get there.
The president also announced the U.S. will be providing Patriot missiles to Ukraine. At the Pentagon, CBS's Charlie D'Agata says Russian President Vladimir Putin will likely respond to the threat by ratcheting up his attacks on Ukraine.
The mood music has changed in the past few weeks, and it shows a frustration. Now, whether you can strong-arm President Putin to the negotiating table, that hasn't been a tactic that has worked in the past. So I think we can expect an escalation in the next few weeks.
People in Fall River, Massachusetts are still processing the news that 9 residents of an assisted living facility died in a fire.
Firefighters arrived at the Gabriel house just before 10 last night and found a chaotic scene. Fire Chief Jeffrey Bacon.
We had an unspeakable tragedy here in Fall River last night. Our thoughts and prayers are with the families of the victims.
About 50 firefighters responded to the facility. The police department says officers carried out about a dozen residents who couldn't walk. Some of those who died were in the building, others at the hospital. Wendy Gillette, CBS News.
And we've just learned that the firefighters union is now saying that understaffing hampered rescue efforts and cost lives there. In Central Texas, volunteer searchers have been told to stop searching for many of the more than 160 people still missing in flash flooding because of today's threatening weather. CBS's Jason Allen is in Kerrville.
We had to move up from the banks of the river this morning where we were because the forecast is for it to come up another 6 feet or so. You know, officials here have started using the word recovery now for their efforts along the river, which means the eventual death toll from this storm could get close to 300 people.
A Kerr County commissioner said during a meeting this morning that he has received death threats. President Trump is threatening 2 of America's largest trading partners, the EU and Mexico, with 30% tariffs starting in August if they don't reach a deal with the U.S. CBS News Money Watch correspondent Kelly O'Grady says the tariffs could hurt American consumers.
Some of the products that you might see from the EU, right? Pharmaceuticals, cars, wine and spirits. Now, when you might see these price increases, think 3 to 6 months.
More than 20 states have now sued the Trump administration in an attempt to unfreeze billions of dollars in funding for after-school and summer programs. Less than an hour before the close of trading, the Dow is up fractionally. This is CBS News. Officials in the world's most populous county are telling manufacturers of air conditioners to make a change. Details from CBS's Cami McCormick.
The government in India wants to require the lowest thermostat setting on all new air conditioners to be 68 degrees. It's part of an effort to save on electricity. India is dealing with increasingly hotter and longer summers. Current air conditioners can cool to as low as 62 degrees. India is one of the world's largest air conditioner markets. 1.4 billion people live in the country, and 10 to 15 million air conditioners are sold each year.
The Sesame Workshop is working to regain full control of Elmo's X account after it was hacked and someone posted racist and anti-Semitic messages. Instead of its usual uplifting posts, the account shared offensive content, including a reference to the Jeffrey Epstein investigation. The posts were quickly deleted. Christopher Cruz, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. We are just an hour away from the close of trading here, and we're seeing stocks higher today. The S&P 500 up 0.2%, the NASDAQ up 0.3%, the Dow up 0.2%. I'm Tim Stenovec, along with Nora Melinda. She is Bloomberg News equities reporter in for Carol Masser. Seeing a little bit of optimism in the trade.
We are.
A little better than what we saw earlier today if you're long in this market.
A pop higher. Communication services, financials, those are the best performing sectors right now in the S&P 500. Real estate right behind them, but a loser today, energy. Energy stocks not doing too hot.
Hey, speaking of stocks that are doing hot, a new generation of YOLO chanting retail traders are demanding risky, volatile, single stock ETFs.
And Elon Musk is turning to Tesla and SpaceX to fuel his AI ambitions.
Also, the Shark Tank companies that are feeling a bite from Trump's tariffs. All that and more over the next 2 hours, right here on Bloomberg Business Week Daily. Before we get to those YOLO chanting retail traders, though, we're getting a check of Charlie Pellet and the day's trade, the top business stories. Charlie's over it all. Hey, Charlie.
Thank you very much. And here's what's going on. We've got just about 54 minutes to go ahead of the closing bell. NASDAQ at a record. S&P close to a record. The Dow, the S&P, NASDAQ solidly in the green right now. Traders sending stocks higher after parsing President Trump's latest tariff remarks. Right now, the S&P 500 index higher by 11 at 6270, a gain of 0.2%. NASDAQ up 68. That is a gain of 0.3%, while the Dow is up 82. Dow Industrial is up by about 0.2%. The Mag 7 index up 0.1%. Your 10-year 4.42%. The 2-year 3.89%. Gold retreating by 0.2%, 33.49. The ounce on the precious metal, while West Texas Intermediate crude 67.02 down by just about 2.1%. Bitcoin up 0.8%, just above a record $120,000 on Bitcoin. So it is an update for the Dow, the S&P, and NASDAQ. As for the overall market outlook, Amanda Agati is Chief Investment Officer for Asset Management at PNC Bank.
I've been saying all year the purple haze of fiscal policy uncertainty is really the only thing that matters. And so it is hard, with now a potentially hard line in the sand with August 1st, to say what the second half of the year is really going to look like. So I think we'll get a little bit more intel. Things haven't been quite as bad as what was feared, but I think the second half is just going to be a tough slog.
And you can hear more of the conversation with Amanda Agati of PNC on the Surveillance podcast. Download it wherever you get your podcasts. Bank stocks higher ahead of earnings tomorrow morning from J.P. Morgan Chase, Citigroup, and Wells Fargo. J.P. Morgan up now by 0.5%, Citigroup up by 0.7%, Wells Fargo up by 0.9%. And of course, count on Bloomberg for the first word on those bank earnings tomorrow morning. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie Pellet. I'm going to set the scene a little bit here. At a home office in Greenwich, Connecticut, you'll find an unorthodox 56-year-old money manager who oversees $4.5 billion. He's got a team working entirely from home. We're talking about Matthew Tuttle, whom Emily Graffeo and Vildana Heinrich write is one of the leading architects of leveraged single stock ETFs. Think an ETF that provides twice the daily return of Michael Saylor's Bitcoin holding company strategy. Emily Graffeo and Vildana Heinrich are Bloomberg News cross-asset reporters. They join us here in the Bloomberg Interactive Brokers studio.
Thanks for having us.
Good to have you guys here.
Yeah.
Congratulations on this story. I know there was a bit of time in the making, so we're glad to have both of you here in the studio. Vildana, can you explain exactly how these things work? This is kind of blowing my mind here.
Yeah, these are basically ETFs, so it's prepackaged for you. It's very easily accessible. It trades on an exchange, obviously. They tend to be really cheap, although some of the more complex ones charge a bit more, but the idea is that they make these complex trades available to the retail masses, for example. So they offer 2x the daily returns of MicroStrategy, for example, or Strategy as it's now known, or any number of very popular companies, NVIDIA, Tesla, but also you can buy the inverse of those. So you can do 2x inverse MicroStrategy. So for instance, if you don't love Tesla, you can buy minus 2x Tesla. So these are really booming in popularity. They're garnering billions of dollars. And it's one way for these sort of upstart ETF issuers to really stand out in this market, in this ETF industry there's more than 4,000 ETFs. So one way for them to stand out is with some of these more interesting products.
So, Emily, who are the issuers here? What kind of stocks are they putting into these funds?
So, like Vildana said, the issuers are mainly not the asset managers that maybe you've heard of. So it's not going to be BlackRock, Vanguard, or State Street launching a single stock leveraged ETF, as we call them. Matthew Tuttle, he has his namesake ETF firm, Tuttle Capital Management. We also profiled Sylvia Jablonski of Defiance ETFs and Will Rind of Granite Shares. So these are ETF companies. They've been around for like 5-10 years, but they're still relatively newer and relatively smaller than the bigger players in the ETF space. But they're really crafting this niche because they have products that it's almost like BlackRock is never going to launch. Almost like from a reputational risk perspective, BlackRock is not going to go out there and launch a 2x Dogecoin ETF, for example, which I don't think they actually have one of those launched, but I think they filed for one of these other startup issuers. But there is demand out there for those products. So that's kind of where the startups come in. They are kind of filling that demand.
Right. And I know, Vildana, a minute ago, you just mentioned how popular this really is. So what's really propelled the growth of leverage ETFs specifically?
I think especially over the last couple of years, a lot of retail investors, as we know, have turned to trading, to daily trading, to managing their own portfolios. If you are a big believer in some of these names that tend to have a following, like Strategy, for example, Michael Saylor, he has a fan base. So it makes sense that that would be an ETF, a 2x Strategy ETF would be one of the more popular ones. Or even with Tesla, obviously we know Elon Musk has a big fan base. So for people who really want to double down, these might be attractive to them, although obviously it goes without saying even maybe that they are risky. So people are drawn to them. You're really supposed to only hold it for a day or a couple of days at most. And a lot of people do. They do hold it for just a couple of days, just because the way that they are composed, the way that they're made up, they reset on a daily basis. So you can have sort of like a drag it's called a volatility drag, but it sort of hits your performance. It can hit your performance a little bit to the point where you are maybe underperforming the underlying stock. It depends. It varies what the market's doing, what the underlying stocks are doing. But
yeah, it could get ugly quickly.
It can. If the underlying stock is down 20%, then what's a 2x going to do, for example? So
I didn't know there would be math.
There's a lot of math involved. Yeah.
This is a
numbers to
quiz.
No, we're not going to do a quiz. Emily, I want to talk to you about sort of the pushback that these are getting from the typical, quote, Wall Street guys. I mean, Bill Ackman had this tweet back in April. How have 3x leveraged ETFs and zero-day expiration options advanced society or contributed to our economy? Cliff Asness of AQR Capital Management, he tweeted out your story earlier today with some commentary. People don't love this.
Yeah, I mean, I think this goes beyond just single stock leveraged ETFs. A lot of these hedge funds have kind of pitched themselves as being able to offer a trade that you can only get if you invest in a hedge fund. ETFs, not only with single stock leverage ETFs, but also there are more and more ETFs known as buffer ETFs that kind of look like structured products, ETFs that invest in multiple asset classes all at once, are kind of starting to look more and more like what some may argue you could get in a hedge fund. So I think there is this general, we could call it maybe feeling of nervousness, that this is more and more looking like a trade that maybe is disrupting hedge fund investing. That's what I've heard before. I've written before about like pension funds, endowments. The Yukon endowment famously shifted. They like sold out of all their hedge funds and bought buffer ETFs. So there is this general nervousness, I would say. But that's not to say that the critiques aren't without some merit. As Vildana mentioned, these are risky products. Often they are marketed towards retail. And so not just the hedge fund people on Wall Street, but also regulators have raised some concerns about, okay, how are these marketed? Do retail investors really know how quickly you can lose your money? Are the names of the funds clear enough to kind of describe what you're actually getting into? So yeah, that's something that we looked into as well.
And let's not forget that some of these hedge fund managers are actually using some of these ETFs for their trades. So I think David Einhorn at the start of the year, it was revealed that he was, I believe, shorting one or multiple of the MicroStrategy levered ETFs. So a bunch of them are also utilizing them in their own trades and their own portfolios.
How difficult is it for startups to compete in the ETF world?
It's really difficult because, like we mentioned, there's more than 4,000 ETFs. You're not going to launch an S&P 500 ETF. You know, there's so many of those options, and the established players for those index tracking funds, they're already doing really well. They've been around for a while, so you have to almost sort of find the so-called white space and see where you can fit yourself in. That's why we are seeing more innovative fund ideas coming about. And I mean, I think one of the takeaways of this story is that they are proving really popular with retail investors, and the issuers who are putting them out are issuers who are sort of running these really efficient operations, but they're gathering billions of dollars, and they're seeing success with a lot of products. Not every product that these issuers put out is going to be a success, and not every has been a success, but you never know. The MicroStrategy levered funds, when they first came out, I think within a couple weeks or maybe 2 months, they gathered billions of dollars. So you almost never know, and it's almost worth a try in their eyes to give some of these ideas a try.
Well, check out this story. Vildana Heinrich and Emily Grafeo co-wrote it. Spent a lot of time reporting it out. It's really worth checking out. And they got to go all the way to Connecticut and hang out in Greenwich.
Great state of Connecticut.
It wasn't too far.
It wasn't too far. Okay, good. It is Bloomberg Business Week. Check out their story on the Bloomberg Terminal and at Bloomberg.com. Coming up next, Elon Musk needs money to fuel his AI ambitions. Where he's turning. That's next.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got NASDAQ at a record, 39 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ all advancing. S&P up 7 right now, 62.67, up by about 0.1%. Traders sending stocks higher after parsing President Trump's latest tariff remarks. We've got the S&P close to a record. The Dow up 38, up by about 0.1%. NASDAQ up 57 for the NASDAQ Composite Index, up by about 0.3%. 10-year 4.42%. The 2-year 3.89%. Gold is down $6 the ounce, 33.49 on the precious metal, down 0.2%. West Texas Intermediate crude down 1.9%, 67.12 a barrel on WTI, and Bitcoin at a record at 119,756 on Bitcoin, was trading above $121,000. Federal Reserve Bank of Cleveland President Beth Hammack says she wants to see inflation lowered further before she would support a cut in interest rates.
I do think we're pretty close to where the neutral rate is. And so I see an economy that's resilient. I see one that's working really well. And I don't see a need to really reduce unless we see material weakening on the labor side.
Cleveland Fed President Beth Hammack speaking with Fox Business News. General Motors and LG Energy Solution plan to add more battery production lines at their joint venture plant in Tennessee to make lower-cost cells beginning in late 2027. GM up by about 0.1%. And this headline from the Bloomberg Professional Service: the U.S. Supreme Court will let President Trump continue his Education Department purge. Recapping, stocks higher. S&P right now up by about 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Once again, repeating that headline that we just heard from Charlie Pellet. The Supreme Court has let the Trump administration, President Trump, continue its Education Department purge. For more details on that story, check it out on the Bloomberg Terminal and at Bloomberg.com. Let's talk about the world of Elon Inc. The money behind Elon Musk's trillion-dollar empire is increasingly flowing in one direction, and that's toward AI. Musk said on Sunday that he plans to hold a vote by Tesla shareholders on whether the company should invest in xAI, the cash-burning AI startup that he founded 2 years ago. It comes shortly after SpaceX, his mammoth rocket launch company, agreed to invest about $2 billion into the AI firm. This according to people familiar with the matter. Dana Hull and Ed Ludlow write about Elon turning to Tesla and SpaceX to fuel his AI ambitions. Dana Hull is Bloomberg News senior technology reporter. She's also contributor to the Elon Inc. podcast. You can catch new episodes of that every single week, wherever you get your podcasts. She joins us from our San Francisco bureau. Dana, Tesla is, I know it's not a car company because we're told it's not a car company. I heard you chuckle there. We're told it's not a car company. They do Optimus, they do the self-driving stuff, but listen, what moves the company's stock? How many cars they delivered? Do they have any business, according to the folks you talked to, making an investment in this money-losing AI company?
Yeah, so the money needs of xAI are enormous. I mean, billions of dollars are pouring into artificial intelligence. There's huge need for compute and data centers. And, you know, xAI is building out this big data center in Memphis called Colossus. And as we've seen so often with Elon Musk, you know, he doesn't, I mean, he runs 5 companies, but they're not really separate. They have overlapping investors, engineers, management, sometimes boards, and Musk, like, often, I don't want to say robs Peter to pay Paul, but like he will you know, commingle his companies in a way that is very unlike any other corporate CEO that we've seen. And I think in his mind, AI is the future. Tesla is also an AI company. If they can invest in xAI, they maybe get preferential access to Grok. We're already seeing that Tesla is now integrating Grok, the chatbot, into its cars. We know that Tesla has sold megapacks to xAI for that Memphis data center. So they already are working together quite a bit. And I think, you know, a lot of investors, particularly the retail investors, see this as a way to get in on xAI. I mean, so there probably is a fair amount of shareholder support for this idea, at least from the retail side.
Yeah, and speaking of support, so of course Musk is planning to hold a vote by Tesla shareholders on whether or not the EV maker should invest in xAI. Does Elon usually let other people, including his shareholders and supporters, weigh in on his decision making?
Yeah, I mean, something like so Tesla is a publicly traded company, and so this would be a management proposal that would likely be spelled out in the proxy. We know that Tesla is having its shareholder meeting on November 6th. We have not seen a proxy yet, but this idea is something that Musk has floated for over a year now. I mean, I think he first polled people on X, like, should Tesla invest $5 billion in XAI like a year ago? And so it sounds like now it's likely to be in the proxy. So, I mean, because it is a publicly traded company, yeah, shareholders have to weigh in. It would be a sizable investment for Tesla.
I want to read a post that you linked to in the piece that you and Ed wrote. It's from Grok on X. First off, we deeply apologize for the horrific behavior that many experienced. We have removed that deprecated code and refactored the entire system to prevent further abuse. This was on Friday, Dana, and it was about the horrific behavior. It was referred to itself as Mecha Hitler, and it had posts that praised Adolf Hitler and appeared to call the Holocaust, quote, effective. This is the chat bot for XAI. Is this thing ready? Like if you're a Tesla investor, do you have pause about sending money from Tesla to a company that has made a mistake such as this in the AI race?
I know, right? That is a very good question. Well, I think like when you say Tesla investor, you know, there's sort of two camps of investors. There are institutional investors, a lot of index funds. You know, Tesla obviously joined the S&P 500 back in December 2020, and then there's this very rabid, you know, retail shareholder base that is wildly enthusiastic, very on board with Elon, and they're really betting on, you know, Elon in the future. And if the future is not car sales, it's got to be something. And so I see that this is all part of Elon's big plan to really position himself as a leader in AI. Remember that XAI was founded after OpenAI by his rival Sam Altman came out with ChatGPT, and so you're seeing Grok try to be a big player in this field. Yes, they have absolutely made mistakes. The whole Hitler thing from last week was horrible. I think it's notable that Grok apologized, or XAI apologized, and like they seem to be sorting it out. But yeah, I mean, the other question I have is like, do Tesla owners want Grok in their cars? I mean, I'm assuming there's a way to opt out or not you know, enable that if you want. But I don't think that when people buy a Tesla, they necessarily signed up for Grok.
So Musk has, of course, really stepped away from that whole political sphere that he was in for a little while, but...
Except when he tweets.
I was going to say, is it fair to say that that's the case? He's trying to step away, I will say.
I don't really buy that, to be honest. I mean, he had to step away from Doge because his time as a special government employee had like a limit. Like you can only serve X number of days per year as an SGE. And so like that came to an end, but he just can't help himself. Like if he feels strongly about something, like he cannot keep his mouth shut. So we saw him tweeting over the weekend about the Epstein files. I mean, and he is still talking about creating a third party. He has, you know, for all intents and purposes, quote unquote, stepped away from Doge, but I think he still has ambitions to be a player in the midterms, to potentially really start this third party. And, you know, he has poured so much money into American politics already. I don't see him going quietly into the night on that.
As we think about XAI, I mean, is there still a conversation about his head being in too many places right now with too many business ventures?
I mean, that's an ongoing perennial criticism of Elon, that he's spread too thin, that he's distracted, that he's got too many things on his plate. But like, that's the way he's operated for years. I mean, he simultaneously ran Tesla and SpaceX for decades, and SpaceX is the most valuable company in the world right now, and Tesla still has a $1 trillion market cap. So I feel like a lot of long-term investors see past that, and they think that, you know, Elon is a genius who can hyper-focus where he needs to and when he needs to, and you know, that criticism hasn't like really held up. Like, he is able to execute when he's hyper-focused, and he hyper-focuses a lot, like every day.
How can we look to Tesla's acquisition of Solar City close to a decade ago as sort of a blueprint for a private investment or an investment in a private company such as XAI?
Well, it was the same kind of deal, right? Where Solar City was struggling and really needed a bailout. And so Tesla bought Solar City, which was rife with all of these conflicts of interests because Elon was the chair of the board, was the largest investor. So it was like, you know, some people forget, like Tesla acquired Solar City. I mean, Solar City was a company that Elon founded with his cousins. So this was, and you know, and now, I mean, Tesla still has a solar roof division somewhat, but it's the same thing. Like Tesla has money, XAI needs money. Tesla, you know, Elon's going to go to his board and say, we should invest. They're going to bring it to the shareholders. I'm sure there'll be a campaign around it. Like, I would imagine that it could pass, like, unless there's really strong institutional opposition. And, you know, the Solar City deal was rife with all these conflicts and it went to court, but like, ultimately Tesla prevailed and it ended up being okay for shareholders. I mean, they took a bath initially, but like the company has still achieved great heights.
Chief Investment Officer Nancy Tengler said that an investment into XAI will further dilute the declining EV business. Is this something that you're hearing from sources as well?
I mean, absolutely. Like Tesla, you know, Tesla used to be all about selling cars. The company used to say that it was going to make 20 million cars a year by 2030. They've completely abandoned that. You know, Elon now tweets things about how like owning a car will be like owning a horse. Like the future is all about shared mobility and ride sharing and AI and Optimus. And, you know, we haven't heard anything about the Mexico plant in months. I mean, I think that plant is basically dead for all intents and purposes. So, yeah, I mean, you know, Tesla has got to find a way to make money. And if they can catch the AI wave and get a return on their investment in XAI, ultimately that's seen as a good thing.
Mm-hmm. In about 30 seconds or less, how's SpaceX doing in regards to everyone trying to do the space race right now?
SpaceX is the dominant launch provider in the United States, full stop. I mean, there's no other way to get to the International Space Station except for on SpaceX in the United States. So I think that they have Starlink. So, I mean, even though they've had some setbacks with Starship, they are the dominant provider in the U.S.
So next time the president threatens to cut off contracts with SpaceX, just remember what Dana said, full stop. They're the dominant provider of this technology.
The Pentagon just gave XAI a contract today. I mean, with some other AI companies as well, up to $200 million per each to do, you know, AI for the government. So those contracts keep flowing.
Dana Hull, Bloomberg News senior technology reporter, also a contributor to the Elon Inc. podcast. Catch new episodes of the podcast each week. Meantime, back to this redhead that crossed the Bloomberg terminal just minutes ago. The U.S. Supreme Court let President Trump resume dismantling the Department of Education, lifting a lower court order that required the reinstatement of as many as 1,400 workers. Granting an emergency request from the administration over 3 dissents, the justices put on hold a federal district court ruling that said that Trump purge could leave the department unable to perform duties required under U.S. law. The Supreme Court order will apply while the case continues on appeal. Stocks still in the green, but off their best levels of the day. When we come back, we're driving to the close. Mike Regan will be here. That's next on Business Week Daily.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks pushing higher. NASDAQ cut a record. Let's head right over to the first word breaking news desk for today's afternoon call. Here she is, Jordan Fitzgerald.
Thanks, Charlie. The main U.S. averages are in the green after Trump says he's open to trade talks. The S&P cash is up 0.1% with the NASDAQ up 0.3%. Taking a look at the Dow, Boeing, Walmart, and 3M lead, with Chevron, Procter & Gamble, and UNH under pressure. The energy sector is slumping after Trump threatened 100% tariffs on Russia. In tech, Meta will invest tens of billions of dollars to build gigawatt-level data centers. And in New York City politics, Andrew Cuomo said he will be staying in the mayoral race. Wrapping things up, gold and oil are sliding, and bank earnings kick off tomorrow. My name is Jordan Fitzgerald from the First Word Breaking News Desk. All yours, Charlie.
All right. I thank you very much, Jordan. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Well, look at that. 18 minutes to go until the close of trading. The Dow up more than 0.1%, as is the S&P 500. The NASDAQ up 0.2%. So we're off the best levels of the day, but also off the worst levels of the day. Let's bring in Mike Regan. He's Bloomberg News managing editor for equities in the U.S. and Canada. I don't think I've ever read that title before.
New title, yeah.
Congratulations.
Thank you. Thanks.
You know what? I'm still going to ask you about crypto.
Of course.
Let's start there, actually. I want to mix it up a little bit. I want to throw something at you because you've spent the last couple of years in the crypto trenches.
Yeah.
$120,000, Mike Regan. Why?
Can you believe it? Well,
I can't.
It is Crypto Week in Washington, D.C., of course. Congress looking at some sort of next bills that they want to get out the door this year, sort of put some regulations on the structure of the crypto market. So, a lot of optimism about that. It doesn't take a lot of news to sort of keep this optimism going in crypto world. Obviously, a very narrative-driven market. So the fact that they're all talking about it this week in D.C. is enough to get you past that 120 level. I think it has come back down a little bit below that, but certainly been a pretty eye-popping rally, of course.
How much of the crypto rally that we've seen has been about this new administration and the policies around the new administration? Can we literally go back to, I don't know, maybe when Polymarket told us that President Trump would win again, and look at the gains in Bitcoin from there and say that's all due to President Trump's policies or optimism around those?
Yeah, well, and I think we're seeing a little more meat on the bone as far as what those policies the outcomes will be. We have almost every day, it seems like there's a new company announcing a crypto treasury strategy. In other words, just buying Bitcoin or other tokens just for their own corporate treasury, or really just
the Michael Saylor strategy.
The Michael Saylor strategy is just being repeated so often. It's mesmerizing to watch. I think the bigger question is, why hasn't it gone up more with all these players getting into the market? But I think the general thinking is that there are plenty of old school hodlers, as they say, who have just been sitting on vast amounts of Bitcoin and kind of, willing to give up a little bit of it to these new corporate buyers. But, the net result has been a very ebullient and buoyant market, obviously, for Bitcoin. And now Ether's catching up a little bit as well.
Mike, I want to bring us over to equities, since that's where you now reside. We were together.
Because Nora Melinda is Bloomberg News equities reporter.
How fitting. Well, when we're looking at the market, if you went to sleep on January, woke up today, it's crazy. So many things happened in between. But when you look at the market, we're not doing too bad. We're not doing too bad. S&P 500 up about 6.5%.
Yeah.
Does the market just not care about this news? What's going on?
I think, obviously it all follows the earnings and the economic outlook. And so far, we really haven't seen too much damage to either one. Now, obviously, the outlook for this earnings season is not sort of super bright. In fact, Bloomberg Intelligence is estimating about 2.5% year-over-year growth in earnings for S&P 500 companies. Now, these companies have a long storied tradition of beating those estimates. So you look at a typical beat, you're probably talking about more like 5 or 6% earnings growth. So, in a way that kind of matches what we've seen in the market so far. And the growth is expected to pick up a little bit in the second half of the year. Now, that said, the term event risk really comes to mind when I think about this earnings season coming up. Especially
is that event tariffs?
I was going to say.
The tariffs and sort of, don't forget we have other big news tomorrow, which is CPI.
Yeah.
Right.
And both the core CPI rate on both a month-over-month basis expected to tick up a little bit to 0.3, and on a year-over-year basis to 2.9%. Now, that 2.9 to me is pretty intriguing number because, as long as you have a two handle, as they say on CPI, I think, everyone can kind of sort of, keep their calm. But should it surprise a little bit and you get to sort of a 3% year-over-year CPI, that core CPI, that is, I think, a bit of an eye popper. And really, as much as President Trump wants the Fed to cut rates and is really screaming from the rooftops that they should, it's tough to do that for the Fed with inflation sort of going the wrong direction. So that combined with, maybe the earnings don't surprise as much as they could. I do think, it's there's a lot of good news priced in, and I think the S&P 500 companies really need to deliver and outperform the expectations to keep this going.
You mentioned President Trump, of course, is really anxious. He really wants rates to be brought down. He's made that abundantly clear. When we look at the market, we spent a lot of time talking about the Fed, but it feels as though now everyone's focused on tariffs. Do you feel like this is a market that cares as much about these Fed meetings, or do you think it's, we're focused more so on the impact of tariffs right now?
I think it's a little of both. Obviously they sort of play off of each other. If the tariffs are going to keep that inflation sticky, then that's going to push out the possibility for a rate cut further down the line. And but right now, we are sort of front and center on tariffs again. I mean, I think the market has come to grips with the fact that, Trump, whether you call it the taco trade or just consider it a negotiating tactic, maybe a more polite way to say it, that nothing he says about tariffs is written in ink. It's all written in pencil, subject to be erased and rewritten at any
written on a
moment.
letter and then posted to Truth Social.
Yeah, right.
As we saw last week and over the weekend.
That too, right. So, I think these comments today, the market's green, a very light green, I guess I would call it, barely up, but it was red in the morning. And I think these, people did take some solace from these remarks that he is willing to negotiate. I think Europe's the big focus now, how they react and the interplay between Trump and Europe, I think is a main sort of source of concern right now. But, I think the market is pretty comfortable with the idea that these worst case scenario tariffs are unlikely.
So we spoke to the CEO of Fastenal earlier today. That was one company that reported. It's not the first company in the S&P 500 to report. We're going to hear from JP Morgan Chase tomorrow. We'll also hear from Wells Fargo this week, Citi, BlackRock, BNY Mellon. Wednesday will be Bank of America, Morgan Stanley, M&T Bank. Thursday we'll get Netflix, Pepsi, GE Aerospace, Schwab on Friday. I mean, I could keep going on. It's a big week. The point is it's a big week, Mike. 3 months ago, we'd be sitting here talking about, what are they going to say about tariffs? What are they going to say about tariffs?
Yeah.
Turns out, that wasn't a big issue.
Yeah.
And for these companies, and any of the companies that we heard from, the investors have really not seen. We haven't seen the worst fear materialize.
Right.
Folks are saying, okay, just wait until August, wait until September, after these tariffs kick in and after the inventory is kind of gone through here in the U.S. Is that fair to say, or is the whole tariff thing a nothing burger?
I wouldn't call it a nothing burger. I would say it's an uncooked burger at this point. We don't know how big it's going to be until we flip it off the grill. I mean, I think, obviously the banks being first, not a huge direct impact from tariffs on them. They're sort of set up to report a really, really strong quarter for the banks that have big trading and market making arms because of all that volatility, both in the fixed income and the stock market. After the Liberation Day, quote unquote, in April, just great for a bank's trading books. And it's, oddly, the deal making is picked up at the same time too, in the back half of the quarter, especially. IPOs and M&As are back. So both of those engines in the sort of capital markets parts of the banks are going to be firing pretty well. I think what a lot of people will be scrutinizing closely with the banks is, are there signs of tariff problems that we haven't quite picked up on yet? Are there sort of credit issues bubbling up among corporate customers or consumers? Are they bracing for even more problems? Are they putting aside more money for loan losses, that type of thing? So that'll certainly be a big point of focus in this early batch of bank earnings. And then the rest, I think, the margins is the big question. How much has the tariff pain not really surfaced because companies are sort of eating the costs of them to some extent on their margins? So we are expected to see a drop in margins. I think to Bloomberg Intelligence has it, I think it's like the lowest margins expected in about a year. So a little downside surprise on margins, I think, would also a bit of an event risk out there for people to absorb.
Mike Regan, Bloomberg News, a managing editor for equities in the U.S. and Canada, still dabbles a little bit when it comes to crypto. So, Mike, thanks for joining us. Do appreciate it. Switching gears, back to a headline that crossed just a half hour ago. A divided U.S. Supreme Court let President Donald Trump resume dismantling the Department of Education. It lifts a lower court order that required the reinstatement of as many as 1,400 workers. Greg Storr is a Bloomberg News Supreme Court reporter. He joins us from Washington, D.C. He's got the byline on the story as well. Greg, they granted an emergency request from the administration. The justices put on hold a federal district court ruling that said the Trump purge would leave the department unable to perform duties required under U.S. law. The Supreme Court order, though, will apply while the case continues on appeal. I'm reading right from your story here because the ink is essentially still wet on this one. Does this mean that the Trump administration can purge other agencies as well?
Not necessarily, but it certainly helps them, at least their legal case. As you said, the big argument against the administration was, hey, you don't have the authority to do this, only Congress does. And you're by firing this many people, you're leaving the department unable to do things that Congress said it's supposed to do. And that's an argument that has been cropping up in other cases and will, this decision will probably, boost the administration on those actions.
So I'm also wondering about what this means just for the Department of Education and what it means for those workers. There's a lot of workers who've been left in limbo. Is that exactly what happens to these workers? They're sort of waiting?
Well, they're sort of waiting, but they will be, allowed to be put out of a job for at least for the time being.
And unpaid?
I don't know the answer to that. I apologize.
That's okay.
I don't want to speak without knowledge here. But given the way the court has been handling these things, this is supposed to just be a temporary order. But the cases where the Supreme Court has issued a temporary order and then later on reversed itself once it actually took up the legal issues on the merits, that's a pretty rare occurrence. So this certainly puts the wind at the administration's sails in terms of actually being able to fire these workers once and for all.
It's July 14th. Typically, correct me if I'm wrong, Greg, but this is because this is the world that you live in. Isn't this a time where the justices are not doing this stuff? They're like out from June or early July all the way until October?
It depends on what you mean by this stuff. This is part of the so-called shadow docket or emergency docket. It is the administration coming to the Supreme Court, and this is actually a fairly old request filed a number of weeks ago, and the administration is saying, hey, we can't wait. We need you to lift this lower court ruling, to stay this lower court ruling, to set the rules of the road while the case is being litigated. And that's the sort of thing that the Supreme Court will act on at any time. It doesn't just, do that in its 9-month calendar for the cases that are considered on the merits.
When it comes to this case, the 3 liberals on the court dissented. What was their message?
Yeah, really, really strong words from Justice Sonia Sotomayor, who wrote the opinion for the 3 of them. She said that the court had handed the executive the power to repeal statutes by firing all those necessary to carry them out. And this is a theme we've been hearing from the court's liberals. They're saying that the conservative majority on this court is letting the president ignore the law, just do whatever he wants.
What do we expect to hear from the Supreme Court when it comes to this so-called shadow docket before October or in the meantime?
We're going to have more of these cases. Right now, there's one other significant one involving another one of these cases where the president is trying to remove the heads of these independent agencies. It was one involving the Consumer Product Safety Commission. He's trying to fire the Democratic appointed members there. We'll probably get more cases. Really good chance we'll get birthright citizenship again in some form. Not inconceivable we'll get tariffs in some form. They're not there yet, but there's so much lower court litigation going on that undoubtedly there will be more very big cases at the Supreme Court this summer.
And they really seem, because of, not just because of the makeup, but it really seems like the president is having a series of wins when it comes to the shadow docket.
Yeah, he's very much been on a roll. We saw a couple cases earlier on involving very fast deportations under this couple-century-old law known as the Alien Enemies Act. That's the cases where the administration was sending people to the prison in El Salvador, and the Supreme Court said, whoa, hold on, you at least have to give them a chance to make their case for why they can't be sent there. Beyond that, however, they've pretty much given the administration a free hand, whether it be other immigration-related matters or, in this case, the structure of the government and firing people, both mass firings like this one and firing top officials of agencies.
Hey, Greg Stohr, thanks for joining us. I know you just wrote this story. You have been super busy, so we really appreciate it this afternoon. That's Greg Stohr. He's a Bloomberg News Supreme Court reporter. Check out his reporting and the entire team's reporting. It's on the Bloomberg terminal and at Bloomberg.com. Just a couple of minutes away from the close of trading, the S&P 500, in the words of Mike Regan, light green, up 0.1%. The NASDAQ, up 0.2%, as is the Dow. This is Bloomberg Business Week Daily. The closing bell starts now.
Full breakdown of all of today's market action and a look ahead to tomorrow with our global simulcast right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu, taking you through to the closing bell with a global simulcast. It starts now. Tim Stenovic joining us from the radio booth. Nora Melinda in today for Carol Masser. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube, Tim Stenovic. Green across the screen for most of the major indices, but of course, we have 2 big catalysts coming up on the calendar within the next 24 hours.
I think you would be referring to CPI and then the kickoff of big bank earnings tomorrow. Is that right?
That is correct.
Okay,
sir.
Looks like we're reading the same stuff, Romaine Bostic.
Yeah.
That's always good news when we're on the same page. Hey, there's also the trade element here, and I think that's what people thought and certainly kind of did dominate today's trade, even though we didn't see a big variation between gains and losses. The comments about President Trump kind of saying, okay, maybe not 30% for Europe, we're open to negotiating, given what happened over the weekend, might have given a little bit of a relief to investors out there today.
I mean, definitely some relief that we are seeing here with all indexes ending in the green. As we were saying earlier, if you went to sleep on New Year's Day and you woke up today, lots happened in between. But if you look at the S&P 500, not much has changed.
Yeah, I go to Tim's point about, the trade tariffs and the threatened tariffs not showing up in the price action, but showing up in activity, because volume is certainly down compared to the 30-day average.
Yeah, and we should point out, of course, I think the earnings picture is really going to be one that drives this market, not so much for the second quarter results, but obviously the commentary that a lot of CEOs and CFOs were unwilling to give the last go round. This time around, they might not have as much coverage. Green across the screen here on this Monday afternoon for most of the major indices. The Dow Jones Industrial Average looking like it's going to close out the day higher by more than 80 points, or about 0.2%. The S&P up just about 10 points on the day. We'll call it about 0.1% as we wait for these numbers to settle. The NASDAQ Composite adding about 0.3%, and the Russell 2000, that's your outperformer on the day, again, up 15 points, or about 0.7%.
All right, taking a look at how things split up in terms of gainers and decliners today. We did see more stocks move higher in the S&P, 286 to the upside, Scarlett 213 to the downside.
And that's reflected in the IMAP as well. So take a look at the 11 sectors in the S&P 500. That big red slice that you see there is tech, but it's only down by 0.2%. The leading decliners here are energy stocks as oil prices sink, and material stocks also lower by 0.4%. Best performers, communication services, financials before the banks report earnings tomorrow, and real estate investment trust.
All right, on the gainers side, a new all-time high for Fastenal. The company reported earnings earlier today. Shares 4% higher at the close. The company reported net sales for the second quarter that were up 8.6% over the same period last year. It did meet the average analyst estimate. We had Dan Florness on the show, the company's CEO. He said that his industrial customers are starting to see business turn around. Here's what he said, quote, "The knife has stopped dropping." What he was referring to is trying to catch a falling knife over the last few years that really in the U.S. has been industrial production. I did ask him, and Nora asked him too, about the impact of tariffs, and he said they tried to move their supply chain back in 2018 during this first round, and they were able to make some changes, not necessarily bringing anything back to the U.S., just not possible right now. Too early to say for his customers, though, whether this new tariff regime will prompt them to move manufacturing back to the U.S.
It's just a reminder of how long it takes to actually move your supply chain back to the U.S. If they were talking about this back in 2017 and weren't able to get very far.
Yeah, I mean, do you remember the move back in 2017 and 2018 was to move everything out of China and like go to Vietnam or Indonesia or India? Well, now it kind of doesn't matter where you are if you're not in the United States, because all of those countries are getting tariffed as well. Hey, did any of you guys see Superman over the weekend?
No. Was it good?
I didn't see it either. A lot of people did see it,
We
though.
look at you and we see Superman.
I was going to say.
Wow. Oh, you guys are the best. Warner Brothers Discovery shares up more than 2%. This after the company did say that they brought in at least $115 million domestically. It did take in $220 million worldwide. This according to a statement from Warner Brothers. $125 million in ticket sales in the U.S. So that did beat expectations of $115 million. This is just the opening chapter in a 10-year plan to interweave movies and TV shows based on DC comic book characters such as Batman and Wonder Woman. Haven't they done this before?
Yeah.
Okay. All right. I'm just
They've done this. And so, I mean, I don't know. Do you think DC is going to get it right this time? I mean, everyone's saying, okay, you had a decent box office domestically, though don't look at the international numbers, Tim. It wasn't not as good. But this idea that maybe they could finally build off this and actually truly build up something that's comparable to the Marvel universe?
Look, I don't know what it takes to have a successful franchise. No
I don't
question.
either, but I like your opinion.
But we can look and see what the Marvel universe has done, right?
The peanut gallery speaks.
Yeah, exactly. I think James Gunn knows a little more than we do when it comes to what makes a successful movie. And finally, I do want to talk about shares of Kenvue real quick. They finished the day higher today by more than 2%. It's the company behind Tylenol, Neutrogena, Listerine, formerly the consumer healthcare division of J&J. The company said that CEO Thibaut Mongon is going to leave the company as it continues to revamp. The board director, Kirk Perry, will take over as interim CEO effective immediately. They faced push from activist investors for changes on how the company is structured and run ever since it was spun off from J&J just a couple of years ago. Once again, Kenvue shares up by more than 2.2%, Nora.
Well, a couple decliners that I'm keeping an eye on right now. We had Waters, that is a life sciences company, about $18 billion in market cap. It fell for double-digit losses when we ended at the close today after saying that it'll merge with Becton Dickinson's biosciences and diagnostic solutions business in a reverse Morris Trust transaction. That's valued at about $17.5 billion. We had Jefferies analysts saying that they expect the stock to trade down due to the deal size and variables added to a clean replacement cycle story. But if you look at the stock on a year-to-date basis, down about 18%. I know it's Monday, but I did want to talk about an alcohol company. I'm looking at Constellation Brands, and we're seeing shares that also fell at the close today after President Trump declared a 30% tariff for Mexico and the EU, which of course we know these are key markets for those drink makers. So tariffs are really the story here. But this is a $28 billion company. They own Modelo, Corona, a lot of the names that we know here. But shares are down about 26% this year. So not great news here for the brand. Maybe people are going to healthier alternatives. We'll see.
I like the fact you picked an alcohol company because you really, truly are filling Carol Masters.
Have to live up to it the best I can. Also, Fluence Energy, that's an energy this is an energy company, and we saw energy is the worst performing sector in the S&P 500 today, and this was one of the names that was in the red. Mizuho cut the stock to neutral from outperform. They're also pointing toward this tariff impact, and additionally, the Republican tax and spending bills effects on the clean energy sector. The company is about $1.4 billion in market cap, but I'm looking at the year to date as well, down 50%. Not looking good.
All right, let's get a quick check on yields. Continue to see a steepening of the curve. Treasuries overall falling for a third straight day. That's pushing yields higher. But two interesting dynamics are playing out. One is obviously that you're seeing much greater moves in yields on the longer end of the curve to the upside. But on the short end of the curve, take a look at that. A 1 basis point move, 1.5 if you want to be particular, on that 2-year yield. And that has been the narrow range that we've actually seen on the shorter end of the curve now for quite some time. In fact, the past 3 sessions, we basically had 1 basis point, 1 basis point, and then 3 basis points. And then if you keep going out, it really doesn't get much wider than that. And I think it is kind of telling, Tim and Nora, this idea that maybe you have a market, at least in the Treasury market, with a lot of folks right now on the sidelines.
Okay, well, we'll see what happens when it comes to CPI. We'll see what happens when it comes to the big banks reporting earnings. In the meantime, I want to talk a little bit about return to office. Yeah, we're still talking about that. It's back in the news this week because Starbucks employees who work at corporate headquarters are apparently going to be required to come in 4 days a week. This is a focus, excuse me?
Which 4?
I don't know.
Maybe they get to select the day that they stay home.
Well, I know that there are some places where they're like, okay, everybody has to come in at least on Monday because that's like our in-office day. And it kind of looks like not a lot of people go to work on Friday, just anecdotally speaking, at least here in New York.
Understandably so.
Subway, I don't know.
Well, we're all here, right? We're in person, but I think this is really interesting for Starbucks. I mean, I was just at Starbucks yesterday, and I had a nice refresher. I don't know if you guys have had the refreshers, but fantastic. And we're really seeing, Starbucks really just trying to do better. They're trying to have a turnaround story here. So I guess they need people in the office to do it.
Well, it starts with the culture, according to Brian Niccol, who's the CEO of Starbucks. We're keeping an eye, of course, on the tariff story. And even though there's new threats of tariffs and companies still aren't able to say very much, there is evidence that it is affecting certain industries. The world's largest swimming pool maker says they will likely hike prices for a second time this year because of Trump's proposed tariffs. This is a Spanish company, Fluidra, talking about this, and they said how much they can't say right now really depends on what gets announced about China in the coming weeks.
Yeah, and this is kind of what I'm really interested in for this particular earnings season. The idea is whether we're going to hear more companies, certainly more U.S. companies, start to talk about the potential impact. We just had Nadia Lovell on the TV program a little while ago, and she was kind of alluding to this idea that we've collected in this country more than $100 billion in tariff revenue. But of course, we know that comes out of someone's pocket. And at least for right now, we have not actually seen that show up in some of these income statements or in some of the inflation data, and I do wonder if that's about to change.
And that's why the guidance tomorrow and throughout the rest of earnings season is going to be so important, the commentary that we hear. Although, is there more clarity? That's, about what the actual policies are.
At some point, company executives just need to say how they're moving forward, even if they don't have the clarity, right?
Yeah.
Absolutely.
Okay, we'll wait till then. How big
of a swimming pool do you have, Scarlett?
Mine is massive.
All right, party at Scarlett's this weekend. Thanks for the invite. Looking forward to it. That is going to do it for our cross-platform coverage of the market close on Bloomberg TV, radio, YouTube, and Bloomberg Originals. We will see you back tomorrow, same time, same place. Scarlett, welcome back.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Welcome back to Bloomberg Business Week daily radio, right? We're daily.
We're everything.
We're everything. I'm Norma Linda, filling in for Carol Master today, sitting here with Tim Stenovic. And I'm looking at a market that ended in the green, so seems like we edged up a little bit here. But I really wanted to talk about sales, Tim. Every year, Amazon hosts an annual Prime Day sale, but this year's was different. Instead of its typical 2-day stretch, the online retailer doubled its usual duration, and results were historic. Although sales were slower during the first 2 days of the sale, demand accelerated later in the week, and that's according to data from Adobe saying that the sale boosted online spending across all U.S. retailers by 30.3% to $21.1 billion. We have Brooke May, managing partner at Evans May Wealth, joining to discuss her takeaways from this year's Amazon sale and what it tells us about the broader economy. Brooke, thanks so much for joining us today. What were your takeaways this year?
Well, Amazon Prime Day was a hit. As you mentioned, they moved it from a 2-day event to a 4-day event, and it paid off. Sales were $24.1 billion. And to put that in perspective, when we look last year at Black Friday, online sales were $10.8 billion. So it was the equivalent of 2 online shopping days for Black Friday. Up 30%, as you mentioned. And it was really incredible for Amazon to see it do so well.
So what's this telling us about the economy and the way that consumers are thinking about discretionary income?
Mm-hmm. I think it's telling. When you look at the areas or the categories that people were buying in, they were looking really at all 35 categories. We saw strong demand. However, there was especially strong demand in electronics and high-end appliances. So consumers were looking to trade up, and they could afford to do so because of reduced prices. In addition to electronics and appliances, we saw strong back-to-school shopping. Everything from school supplies to lunch boxes to dorm room necessities. But really, interestingly, the highest selling items were the Fire Stick HD, the Ring doorbell, Apple's AirPod Pro 2s, and Dawn's Power Wash dish spray.
50% of those.
That would be on the list.
50%. Okay, so 25% of those everybody needs, and that's soap. Okay, 50% of the things you mentioned are actually Amazon-owned companies.
Mm-hmm.
So that tells you, is that about okay, what the company has on sale, or is it about a commentary about Amazon getting into many different areas of our lives? What is it telling you? What was popular?
Oh, I think it's a little of both. When you look, Amazon has a tremendous number of products that are household names. In addition to that, though, there's some pricing power in being able to price those items in a way that can drive additional sales.
Mm-hmm. So is this typically a big revenue generator for Amazon in the Prime Day sales? I mean, I know I'm always scrolling, had to check a couple of things out this week, but is it usually a really big revenue driver?
It is. However, margins are thin. With deep discounting, you don't necessarily get the wide profit margins. However, the sales volumes were there. Interestingly, a lot of Amazon's competitors, Walmart, Costco, Target, had parallel events during the same time. And with competition, you'll see that, you get pricing pressure. So yes, revenues were strong. However, profit margins were really squeezed.
I found it super interesting that when the Prime sale just started, everyone was really nervous that it was not going to generate much revenue. It wasn't doing too well.
Right, we were seeing those headlines. It's down X% versus last year. But Spencer Soper, who writes about Amazon, said it's too early to tell because it's 4 days now. We have to look at it differently.
Most definitely. It makes me wonder, are people just waiting to the last minute? Are we waiting until the sale's about to end?
Or did the deals get better? I mean, this stuff is dynamic. It's really hard to understand.
Oh, you're asking me what changed.
Sorry. Oh, yeah. You're the one with the answers. We're the ones with the questions.
Yeah, I think there's some procrastination there. I don't really have an explanation for why momentum picked up. People could have known that they've got a little bit more time on their hands, so they don't have to jump and they can do a little bit more price shopping. We saw actually this year generative AI tools used to search. And as I mentioned before, we had competitors offering similar events during that same time. Generative AI tools or assisted shopping was up 3,300% 300% year over year, which speaks volumes to how it's been integrated into our everyday lives. In addition to that, though, we saw social media influencers having an impact. Social media influencers, sales that they were able to derive or push to Amazon Prime were 10 times what the sales were for social media overall. So it's interesting to see these trends and how people are shopping a little differently. In addition to that, when we look at how sales came in, more than half of the sales came in through mobile devices versus online shopping on desktops. So there are definitely some macro trends on how consumers are buying, and it was really interesting how that showed through with Amazon's Prime Day event.
Brooke, I always wonder, are these real deals? You know, I miss back in the day where you would get these massive, discounts when you would go shopping, or is it more or less vendors hiking up the prices right before to make it look a bit discounted later?
I think there's a little of both. Some highly purchased products, the price is known. People know what Apple's AirPod Pros cost, and so they're able to do a price comparison, and they know when they're getting a good deal. Consumers right now are fairly savvy. Due to the inflation we've experienced in the last few years, consumers watch and monitor prices, and they use events like this to purchase items that they've been waiting to purchase. And then there's also some impulse buying. I know personally, I go on and I scroll, and if I see a good deal, I'll jump on it.
Right.
And it's not because it's something that I've been shopping for, but it's something that appealed to me in the moment and felt like a good value.
Hey, Brooke, before we let you go, I want to broaden the conversation a little bit because you cover it all. We're talking about Prime, but you cover the economy at Evans May Wealth. You have to know about all this stuff, given what your clients are looking for from you. The big risk right now, do you think that the equity market is accurately pricing in the threat of tariffs?
No.
In a word? You have more time than that. Why not?
The probability of a recession, it's interesting. In April, it was 60-some%, and now it's back down to 20%. So the market isn't pricing in a recession right now. They're not pricing in, tariffs. The market's trading at 22 times forward earnings. That's not cheap. And the hope is that when tariffs are imposed, they're going to be less than stated. And ideally, manufacturers, retailers, and consumers are all going to be able to share in that burden. Companies are trying to get more efficient to be able to absorb some of those additional costs. Time will tell, though. We don't know right now what the full ramification of tariffs are going to be. However, we think that they won't necessarily be as bad as stated and be completely destructive to the economy.
Super quickly, do you expect tariffs to show up in this earnings season?
Just 10 seconds.
No, I don't. I think that it takes 2 to 3 months to see once tariffs are imposed, them actually feed through. So it's probably going to be Q3 if we have some clarity.
All right, Brooke, always good to check in with you. Brooke May, managing partner over at Evans May Wealth Management. The company's got about $1.5 billion assets under management. She joins us from Carmel, Indiana. Coming up next on Bloomberg Business Week Daily, made in America, designed in America, made in China. We break it down next.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks higher, NASDAQ at a record, and this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses, Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at Oracle.com/Bloomberg. S&P today did advance by 8 points, 62.68, up 0.1%. NASDAQ up 54, 20,640, up 0.3. The Dow up 88, up by 0.2%. 10-year 4.43%, the 2-year 3.89%. Gold down $10 the ounce, down 0.3%. And West Texas Intermediate crude down 2.3%, 66.89 a barrel. Bitcoin at 119,000 did climb above 120,000 earlier today. Bitcoin up by about 0.5%. Meta Platform CEO Mark Zuckerberg says the company is building several massive data centers to power its artificial intelligence efforts, with the first one expected to come online next year. Meta today up by 0.5%. Our Mag 7 index up by 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. I'm Tim Stenovic, and that is Nora Melinda in for Carol Massar. We're both here in the Bloomberg Interactive Brokers studio.
Yes, with the design in America but made in China business model brewing uncertainty after President Trump's trade policies, several large company founders have explored ways to repatriate production. But the obstacles are many. Between higher costs and complex supply chains, companies are growing frustrated with the lack of clarity and notice on tariffs. Some founders are saying that a 90-day notice period could be a good remedy for small business owners to navigate the challenges. Christina Lindblad, global economics editor for Bloomberg Businessweek, joins us to discuss how Shark Tank-like companies are feeling the bite of Trump's tariffs. She was the editor on this story. Christina, talk to us a little bit about how this story came about.
Well, I was actually thinking about how I had watched a clip of Shark Tank in which these founders told the judges that they had set up a production line in the United States, and one of them said, "That's crazy," you know, and then...
It is crazy.
And then I thought, how are these companies, so many of them which follow, you know, this sort of Apple model, you know, designed in California, made in TK somewhere else, cheaper.
Usually China, increasingly sometimes
Vietnam,
India.
or, you know.
Vietnam.
And how are they faring through all of this? Because, you know, they don't have the, like, you know, lobbying arm, the deep pockets to you know, have their margins be eaten away like this. So we decided to go out, and we actually, we went through a whole, we cast a whole bunch of companies, and we decided to focus on 4. And we did basically as told tos, you know, so it's like directly from their mouths. And we asked them a bunch of questions about how, you know, what kind of tariffs they were paying right now and what they were looking to do about this. And several of them said that, well, actually, some of them said they had started out making their products in the U.S., but pretty shortly realized that that wasn't going to work out. That one of them said the product was so expensive nobody bought it, and that they were contacted by a Chinese company that was already making something like what they made. And then the other thing we heard frequently is that by going to China or going to some other countries, you get like a full operation. Like, you know, you don't have to be, what people were saying is if you're a small company in the U.S., it's like you're having to watch out over all these parts, there's different parts of production, like you're importing this and that, and, you know, making sure it's all going to the plant. That in China, like somebody was saying, we'll take care of all of that for you. And then also we talked to a person, she makes this little contraction called a click and carry that like you like snap 2 bags over your shoulder.
It's kind of brilliant.
I bought one immediately after.
Do you like it? Do you like it?
Did you buy it after seeing it on Shark Tank?
I know, after
you wrote the story.
Before we wrote the story,
Okay.
because I read the transcript and I thought, oh yeah, this is like your bags are always sliding off your shoulders when you go to the green market. Anyway, and she said, it would take a minimum of 8 months to bring this back to the U.S., and it would involve something like getting a mold maker in China, because there are barely any left here in the US, to design the mold and bring it back and forth, the designers will be here, the mold maker in China, back and forth, sent it back and forth for adjustments, right? And finally, once you had the mold, you still have to import the resin, the plastic resin from China. And you'd probably, she said, I'd have to find a factory that had a high degree of automation, so that kind of beats the whole idea of like job creation, for the tariffs. So yeah, it just seems like some of these, the small businesses really have a hard time and right now trying to figure out what's next.
So net, would it be possible for any of these companies that you came across in the casting call to actually do this in the U.S.?
Right now, they said that at the level of tariffs they were facing, and let's be clear, 2 weeks ago when we were talking to them, no, it's not worth it for them. I mean, we could be talking to them if we were to go back to them. Who knows? After August 1st, perhaps. Although I would suspect some of them would just be out of business.
One thing that we've been talking about quite a bit over the last few months is, okay, who eats these tariffs? And the picture that we've gotten from talking to different CEOs is sort of like, well, everybody in the supply chain. So our earnings will take a hit. We'll absorb some of them. Maybe we'll raise prices. Consumers might pay a little more. That's for big companies. What about for these tiny companies that are watching every cent?
Well, I mean, there's one woman, the founder of Click and Carry, she was saying that, she actually had taken out a loan and sold out a bunch of stocks in the fall because she had been selling online and she was actually starting to sell through retailers. And she's saying, well, I approached all these companies with a certain price. This is what I told them, like, I can provide this to you for this price. But now, with tariffs, I'm going to have to go back to them, and quote them another price. And she's scared, that some of them will drop her product because they've only started carrying it a few months ago. And some of them she hasn't even gotten in. I mean, she has enough, I think, to supply everyone, all the contracts that she has through early summer. But yeah, a lot of companies were talking about how the uncertainty towards the back end of the year when they're having to restock.
Yeah, like we spoke to Levi's on Friday and the company's CFO, and they said this in earnings too, that about, roughly half of their inventory for the remainder of the year is already in the U.S.
Right.
So that's kind of free and clear at this point.
Oh, most definitely. But I know you mentioned earlier, you were talking about a company that you said they were wanting to pass on some of the tariff impact toward the customer, but customers are just unwilling to pay.
Yeah, I mean, I think if you're a young business and you have your foot in the door with some of these retailers, and you don't have a long relationship, you're going to be really scared to do that. So mostly we heard the story sounded like it was going to be the importers eating the tariffs. I mean, I think there's a misconception, largely because of the way the White House talks about this, that it's the exporters eating the tariffs. And, we did hear stories at the beginning of Walmart pressuring Chinese suppliers to lower their prices in order to compensate for the tariffs. But even there, we heard that many of them were saying no. I mean, a small company just does not have that kind of leverage, really. So
what are people, I mean, you cover the economy more broadly. So just outside of this story, if we were to just bring in a broader context, what are people saying about the impact of tariffs on the U.S. economy?
We haven't seen it in inflation yet, although I think we have a print this week, which
tomorrow,
which may throw some light on all of this. I think it could be, a lot of people say, because of this dynamic in which many people knew tariffs of some level were coming right after Trump was elected, right? And there was this big bump, the surge in imports. We haven't seen costs go up because of that, because people are selling down the inventory they already have. I do think there's still a lot of question marks. And also there's been, this kind of whack-a-mole effect where there's just sort of like, okay, it's going to be 145, but now we're going to suspend it. Now we're going to throw it to August. I'm personally really interested in looking at investment figures at some point. I suspect that this year may be one of the lowest, may show a big fall off of corporate investment around the world.
Which is the Not exactly, like the opposite of what Trump, the president,
Well,
wants to see.
he'd like
wants
to
to
see
it
more
that
investment in the
US.
U.S., but I think the uncertainty is just leaving companies kind of probably saying, I'm going to sit it out.
So that's what I wanted to talk about. You mentioned the whack-a-mole. Is it going to be 145%? Is it going to be what was on Liberation Day? Do you have to wait and see what the letter says on True Social to understand what the effect of tariffs is going to be on the country that you manufacture in? Does it mean that there's sort of a stasis here with these small companies that you talk to, or are they plowing ahead and moving forward?
One of them is fortunate and has suppliers in many different countries, and they sound like, and they were lucky. I think it was, Turkey was their main supplier, and that wasn't one of the countries that had but the thing is, we're going by what Liberation Day, like the charts, and Turkey wasn't, very severely affected, so, but you never know. I mean, because now we're seeing duties used for purposes other than just delivering trade deals, in the case of Brazil.
Yeah.
And Bolsonaro and Trump's friendship with Bolsonaro. So that's been an issue where, we're seeing tariffs.
Yeah, just to clarify that, he basically said that this was not about the trade deficit because we have a trade surplus with Brazil. Instead, this is a punishment for the way that Bolsonaro is being treated and prosecuted by the current president.
So the story talks about the fact that some founders are saying that they'd like to get some sort of notice, even a 90-day notice. Talk to me about that. What are they thinking?
That was interesting. I hadn't heard
format?
that before. People were talking about getting an advance notice about when tariffs. One person said just like an advance notice and when tariffs are going to go up. Another one said can get an advance notice if like there's a group A of countries, those tariffs will go up and these will go down. You can't really wage a trade war like that, though. I don't think, So, well, we're certainly maybe you can, but certainly not how it's being waged now. I just think it's just like a difficult time for people to make decisions, and what came through is they wish they had more wherewithal, to like adjust. And also, you're talking about small businesses sometimes with some of the people we talked to had less than 3 people full-time staff,
Yeah, they're shipping one container of something at a time.
Right, exactly.
Which is a tiny portion of what you see on a cargo ship.
Yeah, I mean, we had one person who we didn't end up, choosing for the package who had to go back to her old job, So, yeah.
Well, it's a great piece, Christina. I encourage everybody to check it out. It is in Bloomberg Business Week. Christina Lindblad is the editor of it. She's global economics editor for Bloomberg Business Week. She's also the brains behind the idea for it. So everything Shark Tank, address those questions to Christina Lindblad.
Okay, I got to tune in.
You got to tune in, or you just got to read everything in Bloomberg Business Week, and then you can get the update. Hey, stocks finished the day higher, but not by much. The S&P 500 up more than 0.1%. The Dow up 0.2%. The Nasdaq up 0.3%. Coming up next on Bloomberg Business Week Daily, we're talking drugs.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks higher. We've got NASDAQ at a record, up 54 points today, 20,640 on the NASDAQ Composite Index, up by about 0.3%. S&P higher by 8, 62.68, up by 0.1%. Closing near a record, the Dow up 88, up by about 0.2%. Traders send stocks higher after parsing President Trump's latest tariff remarks, with the market gearing up for results from big banks tomorrow morning. Also, a key report, CPI on inflation. So the 10-year yield today, 4.43%, the 2-year 3.90%, gold down $12 the ounce, down 0.4%, 33.42. West Texas Intermediate crude at 66.92 a barrel, down 2.2%, and Bitcoin up 0.9%, 120,190 on Bitcoin. As for investor sentiment, Brooke May is managing partner at Evans May Wealth, and she was a guest right here on Bloomberg Business Week Daily.
The hope is that when tariffs are imposed, they're going to be less than stated. And ideally, manufacturers, retailers, and consumers are all going to be able to share in that burden. Companies are trying to get more efficient to be able to absorb some of those additional costs. Time will tell, though. We don't know right now what the full ramification of tariffs are going to be. However, we think that they won't necessarily be as bad as stated and be completely destructive to the economy.
Brooke May of Evans May Wealth, interviewed right here on Bloomberg Business Week Daily. General Motors and LG Energy Solutions plan to add more battery production lines at their joint venture part in Tennessee to make lower-cost cells starting in late 2027. GM today down 0.1%. Recapping stocks higher, NASDAQ at a record, S&P up 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks, Charlie. The global biotech industry is experiencing a tectonic shift. I'm Nora Melinda, in for Carol Masser, here with Tim Stenovic. So China's drug makers have come a long way from their copycat days and are now challenging Western dominance on innovation. Bloomberg News health reporter Damien Gardet joins us in the Bloomberg Interactive Broker studio to discuss the Bloomberg Business Week story on how Chinese drug makers are disrupting the global biotech power dynamic. Damien, how much of a player has China historically been in the pharmaceutical space?
Not much, or at least not in the quest to invent new novel treatments for serious diseases. For many years in the pharma world, China, probably much like the role it played in other industries, was kind of a source of cost arbitrage. You could get cheaper labor, cheaper raw materials there, but it wasn't a place where Western countries and Western drug makers looked for innovation, as it were. And then over the past 10 years, you would read articles like, look out, China's coming, they're building this up. And like many things, I think, with respect to China, it was gradually and then all at once. And then we kind of woke up, and as a result of a series of policy changes, as you point out in this story, it's pointed out that China now accounts for the second most novel drugs in development of any region in the world, surpassing the European Union, which for many years had been second to the United States, and China is now very close behind the United States on that measure.
When you think about the countries or regions in the equivalent of the FDA approval process in Europe, the European Medicines Agency, these are two of the strictest governing bodies when it comes to approval of medicines, no? Mm-hmm. How do these regulatory agencies view drugs from China?
I would say, for one, the FDA is established as kind of the gold standard, and countries around the world seek to emulate the FDA.
Which we'll talk about a little later, because it's going through a lot of changes under RFK Jr.
Right. The gold could be arguably being varnished. But in the meantime, the FDA's approach has been that they have granted a lot of breakthrough designations or other kind of statuses upon Chinese invented drugs that suggest that they're better than what's out there. So that's kind of a laurel on Chinese science. However, the FDA has taken, I think, an understandable tack, which is that they will not approve a medicine for people in the United States if its clinical trials were done solely in China or solely in any other country, for reasons of, honestly, equity is one of them, but even just like scientific validity. People from different parts of the world have different genetics. And so if I study a cancer drug only in, for example, India, can I really say that the benefits I see in that trial will apply to everyone in the United States?
So if you're a developer in China of a medicine, wouldn't you then do a randomized clinical trial or randomized controlled trial in a way that then would get acceptance from the European medicines agencies and the FDA.
You would if you wanted. That would be the next step, I think, with this nascent Chinese biotech industry. Because what we've seen so far is that Chinese companies are very good at inventing these novel drugs. But when it comes time to do the kind of trials you're describing in the United States and in Europe, they will often seek to partner with a Pfizer, a Merck, a Sanofi, who will foot the cost in that and also will have the expertise of running a global clinical trial that a Chinese startup may not necessarily have. What we may see in time, and well, almost certainly we'll see in time, is one of these Chinese biotech companies growing into a Pfizer-like entity unto its own, where it would not only just compete for research spending, but compete with Merck, with Pfizer, the way that Johnson & Johnson might.
Damien, the story talks about the fact that China's biotech firms have an advantage conducting research cheaper and faster. Why is that?
I mean, for one thing, everything's just a little cheaper in China, but in terms of the speed of it, that dates back to a 2015 effort that the Chinese government instituted, where they wanted to bring about, in the future, the present that we see today. So they enacted regulatory reforms that made it easier to recruit clinical trials. China has a nationwide network of hospitals that makes it faster and more convenient to do this kind of thing. And then they allowed, I don't want to say cut corners, but perhaps a more streamlined approach than the FDA and the EMA have had traditionally. And as a result, Chinese companies were able to catch up far more quickly than I think a lot of people assumed.
Have you guys heard that they call Diet Coke fridge cigarettes? Have you heard this?
I've never heard this.
Yeah, I heard this recently. But I'm kind of an old, so I don't know if youngs are saying that. Freezer cigarettes, ice cream. At least in my house, that's kind of how it is.
Interesting.
So it's Crypto Week in Washington. But it's also Ice Cream Day in Washington today?
At least at Health and Human Services, yes. So RFK Jr., Robert F. Kennedy Jr., the head of Health and Human Services, today had an event in which they announced that a group of 40 ice cream producers in the United States have voluntarily agreed to remove a series of artificial dyes from their products, I believe by the end of 2027, in keeping with the sort of broader RFK, Make America Healthy Again effort, which has really zeroed in on certain dyes, food dyes in the United States.
You know, I have to tell you, when I think about food dye, I did not think about ice cream, Nora.
At all. I mean,
I'm a
cookies and cream girl.
Or is this stuff just so present in everything that we eat
that we just don't even notice?
Not even our radar?
I would say yes. Yeah, it is kind of like trying to teach a fish what water is.
Yeah.
Like,
Exactly.
We in the United States are kind of swimming in processed foods.
So ice cream is ice cream. So this is the many big food companies, including ConAgra, Nestle, Kraft Heinz, and General Mills, have pledged to remove synthetic dyes from large swaths of their food. This is going to take a long time. What do these commitments mean? Does it mean that we're going to start seeing different looking ice cream in the stores?
In theory, well.
Or different, not different tasting.
I was going to say, I guess
dyes.
a lot of ice cream is sold in clear containers at this point, so it would be visible to you. In theory, the thing that I and many others have kind of made a note of is that all of these agreements today are voluntary. Manufacturers have said they will do this, not to disparage the word of America's proud corporate entities, but they don't always follow through on things, and they think in the long term, and this administration is a temporary proposal. RFK's leadership of HHS is a temporary proposal. So I will be interested to see, let's say in 2028, how many of the great big sweeping promises from food companies and beyond that were made in the first year of RFK's HHS actually hold through in the years to come.
It's so funny because when I think about ice cream, right, I feel like you kind of already know what you're getting yourself into. I mean, I didn't know there were dyes in ice cream really until today, but it makes sense. But I just feel like you already know that's the junk food that you're going for. So curious if it's going to change the taste at all. That's my curiosity.
It shouldn't, but I think it's a good point, though. Like, I haven't done a Cochrane review of, like, safety statistics, but, like, are these dyes in isolation that much more or even incrementally more unhealthy than the stuff that we all already know is in ice cream and that we are deliberately consuming when we buy it?
And reaching for.
Ben & Jerry's, Haagen-Dazs, what's your flavor? What's your pick?
I like Van Leeuwen. Is that how you pronounce it?
Yeah, of course. That's very New York.
Fire.
Okay.
So good.
Okay.
I
Very
almost never
bougie.
buy ice cream.
Very bougie.
Very bourgeois.
Nope.
I would prefer a Van Leeuwen. I think Ben & Jerry's.
I know, I didn't even choose one of your options.
Ingredients, I always think, like, what is this?
I'll go Haagen-Dazs if I had to choose between the two.
I like this.
Dulce de leche.
All right, high class ice cream taste here. Damien Gardet, Bloomberg News health reporter. Also Nora Melinda in for Carol Massar. Coming up next, stocks on the move. This is Bloomberg Business Week Daily.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week Daily. That is Nora Melinda. She is in for Carol Massar. I'm Tim Stenovec. The S&P 500 up 0.1% today. The Dow up 0.2%. The NASDAQ up close to 0.3%. A lot happening this week. We're going to get a read on inflation with CPI tomorrow. And then we've got a host of companies, including
Earnings
the big banks,
galore.
reporting earnings.
It's nonstop. It's going to be like a flood, that will follow. But
It's like our quarterly Super Bowl.
exactly. I'm always looking forward to it.
Hey, I'm Tim Stenovec along with Nora Melinda in for Carol Massar. Let's take a look at some stocks on the move today. We're joined right now by Christine Aquino. What do you have on your radar?
Well, Tim, let's take a look at water, shall we? Biggest decliner on the S&P 500, ticker WAT, shares down more than 13% at the close. It's the worst performer, as mentioned, on the S&P 500, and that is because it said that it will merge with Becton Dickinson's Biosciences and Diagnostic Solutions in a reverse Morris Trust transaction. That's a mouthful,
Excuse me?
Right. That's essentially a tax optimization strategy that they often use in M&A deals, just to make it simple. But yeah, that was a deal valued at about $17.5 billion. And, Water is reporting a bunch of synergies, a bunch of cost synergies and revenue synergies because of this deal. But then the word on the street is that, investors aren't necessarily expected to view this positively in the short term just because there's a bit of dilution. It will take time to implement these strategies. But, Waters is saying that they are expecting about $345 million in annualized EBITDA synergies by 2030. So let's see if investors is willing to give it the benefit of doubt eventually.
I had to talk about that transaction on the closing bell. Such a mouthful.
It is. So many words.
So many words to put together. But I was looking at what the analysts were saying as well about the stock. Jefferies was saying that they expect the stock to trade down due to deal size and variables added to a clean replacement cycle story. Shares are down, about 18% year to date?
At one point, yeah. And 13% of that just today. So
Right.
not positively received at first blush by investors.
What else are you looking at?
Looking at Autodesk, so one of the outperformers on the S&P 500 today. So ticker ADSK, shares are up more than 5%. And so this is kind of a reverse of what we saw with water. So this company saying that it is no longer pursuing an acquisition of PTC. That is according to people familiar with the matter. And so that would have ranked as one of the year's largest deals so far. But investors weren't necessarily happy about this. So the shares have fallen more than 10% since the 8th of July. So that was the day before Bloomberg News reported it was considering an acquisition of PTC. And so now that they're no longer doing that, investors are taking that as a positive sign. Potentially, maybe they just didn't like the sound of this deal.
This one was interesting from last week because we saw both companies decline after the deal was announced. Typically, you don't see that when it comes to an acquisition. So there was something that investors didn't love about this.
Yeah, exactly. And so now they're happy that is no longer happening, evidently, from the share move today.
Okay, PLTR is the ticker. Palantir is what we're talking about. This is a $352 billion market cap company. Absolutely unbelievable.
Yeah, and it's been on a tear today, Tim. So we did see shares hitting record highs. They're up about 5% at the close. We've seen a few positives for Palantir, right? The most recent one would be President Donald Trump apparently is set to announce a $17 billion investment in artificial intelligence and energy in Pennsylvania on Tuesday. So that's tomorrow. That's going to be part of the inaugural Pennsylvania Energy and Innovation Summit, and executives from Palantir are expected to attend. So potentially we could see some tie-ins there. And then, other things going on that are positive for Palantir. We've seen 13F filings, Gateway Investment Advisors boosting its stake in Palantir for the 30th June quarter. And Wedbush analyst Dan Ives last week raising the target to $160 from $140 and maintaining the outperform rating. So we've just seen that stock really kind of steadily tick higher over the past week.
It's interesting. I mean, for an investor that hopped in on this trade 5 years ago, stock is up 1,957%. That's insane.
I didn't even know it was public back then.
Right?
You could have bought and held.
It's up 97%
year to date
so far this year.
It's on a tear.
It's on a
as
tear.
you said.
Yeah.
Just nonstop through the wind.
Wow, that's pretty amazing. Christina Kino with today's Stock Movers. For more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Check out Stock Movers on Apple, Spotify, or anywhere you get your podcasts. As we mentioned, it is a big week when it comes to economic data. We've got CPI before the bell tomorrow. Right. Tune into Bloomberg Radio for the latest numbers there. CPI month over month expected to come in 0.3%. Same with the core CPI as well. Year over year, we're expecting to see 2.6%. And excluding food and energy, we're supposed to see that come up 2.9%.
And, we get PPI the following day as well. I know CPI is what we really care about, but PPI is coming through as well. There's going to be a lot to follow this week. Retail sales later in the week as well. And as you mentioned, just a slew of earnings. So it's going to be a lot for Wall Street to parse as we're going through the coming days.
So there's also big bank earnings tomorrow. JP Morgan, we get Bank of America on Wednesday. We got Netflix this week as well. So yeah, no shortage of things to talk about.
No shortage at all.
Thank you so much.
Thank you
for hanging out with us again. That was a lot of fun. You'll be back again this week.
I'll be here Thursday.
Okay, she'll be back on Thursday. That's Nora Melinda. She is Bloomberg News equities reporter. She's in for Carol Massar this afternoon. Check out all of her reporting and the entire equities team's reporting at Bloomberg.com and on the Bloomberg terminal. I'm Tim Stenovic for Nora Melinda.